In today's video, we're going to discuss which Yieldmax funds have the best Bitcoin exposure. As Bitcoin has been on a run lately, we would like to get more exposure to Bitcoin, but also receive dividends in the process. And I've identified 5 funds of Yieldmax that do that. So we earn over $150,000 per year in dividends at this channel, and my performance of value shows that I'm up 30% for the year, beating the S&P as you can see below. Okay, so we're up 30% and the SP is up 21%. So this is how you live the FIRE lifestyle, in my opinion, guys. Financially independent, retire early. Not only do you get dividends of over $150,000 per year that can pay all of your bills and qualify to banks for loans, but you're also getting their performance here. Okay, you want the best of both worlds, capital gains and dividends. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. If you go to the positions tab, you'll see that first of all, we're up 3,500 today. We were up 6,000 earlier this morning, proving that dividends aren't boring. You can get days gains as well. I don't really care if I'm up or down. I just want to track the indexes. But if I'm going to be getting dividends, I also want capital gains. And so if we scroll down here, we'll see who is contributing to these gains. First of all, it's Cornerstone, as always, about 1,000 from Cornerstone. But then OARK is up 1.5%. And we should just start here because OARK controls a lot of Bitcoin through Tesla and CONY. If you look at the holdings of OARK, they own CONY, they own Tesla. And Tesla is one of the picks that I have for this video, and we're going to get into that in 1 second. But first, OARK, okay, it has a combination of everything. So if you look at a chart of OARK, you can see it's had a nice move up from the lows, but we need to track the underlying ARKK. So let's go to ARKK now. And you'll see that ARKK has had an explosive move up back to around 50 a share. It looks like we're breaking out above 50 now, the old resistance here. If you need help understanding charts, that's in my Volume 2 e-guide. So we've had a big run in ARKK. We're still cheap on a 10-year chart. We're still really cheap, okay? So I think this has room to run. OARK has been one of my favorite Yieldmax plays thus far because it's diversified. But if we go to its portfolio, you'll see Coinbase is the largest holding now, and Tesla is the 3rd largest holding. So I know that everyone knows Coinbase is a Bitcoin play because they are the exchange for Bitcoin. People do all their buying and selling of Bitcoin there. All right, so I don't really have to discuss CONY, but the first fund we're talking about today is OARK, and I like it because it's diversified. It has about a 30% dividend, and it has a couple of names in it that have Bitcoin exposure. But the next name we're going to talk about, the lesser-known fund that I was alluding to earlier, was Tesla, okay? Tesla, I have about 13 grand in. Why do I have more in Tesla? Because it is a bigger part of the indexes. I've showed you this in past videos. Tesla is about 2% of the indexes, as you can see below here, 1.91%. So that's much bigger than what Bitcoin is represented in the indexes. And Tesla is also looking cheap on its chart. It's cheap relative to CONY. These are apples and oranges. One is financial fintech with Bitcoin exchanges, and the other is electric vehicles. However, Tesla owns Bitcoin on its balance sheet. It is the 3rd largest publicly traded company with Bitcoin on its balance sheet. So look, Tesla is cheap on its chart compared to CONY, and on a 1-year chart, yesterday it pulled back to the 200-day moving average, and I was adding there on that recall news. The recall news seems like it wasn't a faulty feature of the Tesla vehicles. It was just a software update that needed to be sent out to help people be to help them pay attention more on the road when they're using the auto assist feature. So it didn't even seem like a problem for Tesla. And again, it's 2% of the indexes with a 60% dividend. So I added to Tesla yesterday. I'm trying to add to that on dips. I told you in past videos, and I'm going to get this up to about 15,000. Even though it's a stock, it has a large dividend, and that compensates me for my risk. And it's a large part of the indexes, so I don't mind having a little more in Tesla. Plus, it has exposure to many themes, not just EVs, but again, Bitcoin. So OARK is the 1st largest holding of mine for Yieldmax because it's diversified. Tesla is the 2nd largest because it has a large enough yield to compensate me for the risk, and it's a bigger representation in the indexes than CONY. The 3rd Yieldmax play, obviously, is CONY that we come across in the portfolio. It was up 6% yesterday, so we're up 11% in this fund. We were up 11% earlier this month, but then they had the ex-dividend date. CONY is paying out about 126%, 117%. Okay, so that is a monster yield, and so that's why I have 10K in CONY. Because look, first of all, it compensates me for my risk to have that much in CONY, since the dividend yield is so much, the distribution yield, whatever you want to call it. But the other facet of CONY for me is the fact that Bitcoin should be 3 to 5% of your portfolio, experts say. So this is still under that weighting of 3 to 5% of my portfolio. And my portfolio with 400 grand, let's just say 500 grand, 10% would be 50 grand. So 5% would be 25 grand. So I'm nowhere close to the 5% mark in CONY, and I have room to build this up if I want to get Bitcoin up to about 3 to 5% of my portfolio. But don't forget, we are mentioning other names in this video that have Bitcoin exposure too, so we have to keep that in mind. We can't have too much Bitcoin exposure and then risk, let's say the Fed raises rates, which they kept rates steady yesterday, and that's what made the market fly. But let's just say we have problems with interest rates, or for whatever reason growth slows down. Well, then we don't want to have too much Bitcoin exposure, as that ruined you in 2022. All right, so we just talked about CONY. All right, that's a given. Coinbase. Okay. And I have about 11,000 in that. Again, we were down. We were up 11%. The ex-dividend date came, dropped the stock by the amount of that ex-dividend. Now we're back up 11% again, and about to receive that large dividend of about 100%. So we're getting both dividends and capital gains with CONY. But also be aware of these Yieldmax funds. They are 50% maintenance. Okay, 50% maintenance takes up all of your available withdrawal. Well, half of your available withdrawal. If you need help understanding maintenance, that's in my Volume 3 Margin E-Guide. Okay, so 50% maintenance, I have about 100 grand in Yieldmax funds. That means that it takes up about 50 grand of my equity. So I can't have too much in Yieldmax funds, because when you're using margin as your strategy to get ahead in your brokerage account, you want to keep your available withdrawal high. So my market value is about $4.75. And for every $1 you put in your account, you get $4 of purchasing power to all those who are new at this channel. So we have about $1 million of purchasing power at our disposal. And I just use a fraction of this purchasing power to get ahead. I'm not really interested in making videos about stocks. I'm really just about the FIRE lifestyle here at this channel, financially independent, retire early. And I'm showing you how I'm living out of my brokerage account, actually living free, not just tossing around ideas for your enjoyment. So 144,000 in margin debt will be paid back in less than 1 year, because my dividends are about 150,000. So this debt will be gone in 1 year, and my account will grow by the equivalent amount. Let's just say my account's at 500,000. My account will be at 650 in 1 year. My debt will be at zero, unlike with credit cards, because you just go to zero balance when you pay down your credit cards. But in your brokerage account, you actually grow by that equivalent amount. And then you're left with all these dividend-paying assets to yourself, paying you monthly cash flow for life. These dividends qualify to banks for loans, and they pay your bills, okay? So this isn't an introduction. This isn't me selling anything. This isn't me saying, well, even though I'm saying these things that are repetitive in every video, I'm not going to have chapters to skip across this, because everyone needs to know this information. And any other YouTube video I've ever watched, you might need to skip ahead from some things because they have irrelevant information. But for me, okay, all this information is highly relevant, and no one seems to know this stuff about living freely out of their brokerage account, using maintenance, low maintenance to keep your available withdrawal high. Okay, so no one seems to understand this. Even if you're not using margin, you want to keep your available withdrawal as high as possible so you can withdraw out of your brokerage account and live the FIRE lifestyle. But even if you are using margin, you want to be able to withstand 30% corrections, which I can do. I can withstand over 30% correction in the market. People always ask, when you use this margin strategy, how do you not get scared? What if we crash? What are you going to do? Well, my dividends of 150,000 pay back my margin debt in less than a year. So my leverage goes away in less than a year. I'm not worried about a market drop over the course of a year. I'm worried about a crash overnight. But then again, I have my high available withdrawal. So if you take my account value of 500,000 plus the debt of 150,000, that comes out to 650,000. What's 10%? 65,000. 20%, that's about 130,000. So a 30% move, let's say 80,000. I'm still nowhere close to a margin call, and I can withdraw freely out of my account. I can use my E-Trade credit card to go wherever I want in the world. I can buy cars, clothes, shoes, spend my money on whatever I want using this available withdrawal. And even though I'm in debt, I can still withdraw freely, okay? That's the magic of the FIRE lifestyle and using a brokerage to get ahead. You can't really do this in a Roth or a 401k because they don't have margin. So the fourth name that we're coming across that obviously has Bitcoin exposure is Square. Square we have about $3,000 in because it has a really high yield to compensate me for that risk. If we go to the dividend of Square, we'll see it's around, it shows here 100% for Square. So I'm staying in Square, even though it has 50% maintenance. Be aware of that, 50% maintenance once again. So I'm not putting too much in this name. Plus, it's not in the index, it's Square. So I only have $3,000 in it. But that's because, that's even more than I typically have for my stocks. Okay, usually my stocks I keep them at about 1,000 to 1,500. But again, the dividend is compensating me for that risk. Okay. So Square, and it's really cheap on the chart. I've showed you charts in past videos. Go check out my blockchain video on Square and PayPal if you want to see more on these two funds, because that's the next fund I'm getting into is PayPal. But it only has a 30% yield, so I only have 2,000 in this fund. But PayPal also is really cheap if you look at it on a chart. Okay, go just check out PYPL. I'll do a quick snapshot for you here. It's considerably off its highs, and I think it's a high quality name. It's got a global footprint. It's in the S&P. Snapshot for PayPal. You see the chart there. It was near 100. Now it's around 60 a share. So PayPal is really cheap, and it has some blockchain exposure. Not necessarily Bitcoin, but all these fintech names and blockchain names are similar, and they get similar pin action when Bitcoin goes up. So, is there anything else left in this portfolio? Look, I want to show you MRNY. That's the Yieldmax healthcare biotech play. That's up huge because Bitcoin. Risk on is starting to get going. Look at my Labu play. It's up today because the Fed kept rates steady yesterday. So risk on seems to be back on. Retail was up 9% for me this morning again. Kohl's was up 8% this morning for me again. Now they're up 5 and 5, but maybe we're just seeing a short-term pullback this morning. Okay, but we were up again pretty significantly. We're up about $6,000 this morning because of these other risk-on names that I'm mentioning below. And I've done videos on Kohl's, on these options that I'm selling. Okay, the options. Look down at my options tab. Okay, like I was up 300 in TNA earlier today. These names can move for you as well. These option names that I sell options on, I get extra money to lower my margin, thousands of dollars here to lower my margin. And so that's why my margin debt is a little bit lower too at 144. And again, they give me days gains potential. So I get about 1,000 in gains from Cornerstone, or a few thousand a day from Cornerstone alone, then everything else a few thousand, and then my sold options a few thousand. That's how I engineer the days gains of a few thousand a day, plus the dividends of over 150,000 that you're seeing. So if you need help using options or margin or understanding maintenance in your account, or even playing Cornerstone because you have to time this fund around its rights offerings, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to my phone number and the Discord chat room for life. There's Cornerstone. It beats all the indexes, and it's 5-star, just in case you're wondering why I own it. But again, beware of that fund. Time it around its rights offerings. Today, we're down because of the Cornerstone X date, but we're still up in the account because the rest of the market is strong, and that's what diversification does for you. Okay, so I have Cornerstone, Yieldmax, Defiance, and then these stocks at the bottom. And yesterday we were down in Cornerstone, but we're still up 1,000 because of these because of the diversification with Yieldmax and Defiance. But some days Yieldmax and Defiance are down and Cornerstone's up, and that gives you days gains potential once again more than Yieldmax can really give you. So that's why I have Cornerstone as well. And they have a 21% dividend that drips down at the NAV for you. So again, that's in my Volume 4 e-guide if you need help playing Cornerstone, timing around its rights offerings. And again, when you buy my e-guide, you get free access to the Discord chat room for life. Okay, so we have over 500 members in here that can share their unique experiences with you. We're all trying to live the FIRE lifestyle. You can follow my portfolio on Discord. We have a Yieldmax channel, a Bitcoin channel, a Cornerstone, you name it. If you like the video, click like or subscribe, and I'll talk to you soon. Thanks.